Everyone, just going to take you through the morning briefing. First of all, I thought the best place to start would be the close on Wall Street, as we did see very aggressive selling after we went away yesterday at the European cash close. In terms of the major three indices in the US, finished down 2.5% in the S&P. The Nasdaq, the biggest casualty of the losses though, that finished down just shy of 3.5%. Sizable losses, so I thought I would start off by just looking at the S&P chart on the daily to kind of summarize yesterday's session. One of the things was yesterday morning, markets were pretty quiet in the European session, owing to the lack of real events happening of importance and economic data or speakers. But you can really see the price action taking place in the US session. So keep in mind, it's quite a similar setup today in terms of the schedule. There's nothing really much of note coming out this morning for Europe until the Bank of England at midday. But you can see with oil very much being a focus of the markets and a real driver of direction, when that NYMEX pit opens and things get underway at Wall Street at 2 and 2:30 each respectively, that's when we tend to see a bit of a pickup on these more quiet calendar days as volume and flow starts to really push things from a US perspective. In terms of one of the catalysts, obviously oil yesterday was kind of hovering around a fairly tight level, around 31, until we had those crude oil inventory data, which was a surprise build on the headline reading. That was counter to the APIs which we had the night before, and as such that did see a fairly aggressive spike lower in oil prices. That did act as a bit of a catalyst really for the initial push lower here in the S&P 500. If I remember correctly, it was roughly around when we were finishing around 4:30, 5 o'clock last night, it was when it really started to push lower. The major three indices all breaking their respective pivot levels, also giving a bit of further impetus to the downside. And then in the case of the S&P, and found a bit of support around that S2 level before just consolidating slightly in the overnight session. One thing though, with these fairly sizable losses, they continue to mount. Again, in terms of the reasoning why that happened yesterday, because they're fairly big percentage moves when it comes to US indices. I know it's not in the scale of the likes of the Shanghai Composite, which has moved 7, 8, 9% type of levels, but 3.5% in the Nasdaq, 2.5% in the S&P is pretty sizable. And there wasn't really one particular headline which caused that sell-off. More so, it's the theme that's been present since the beginning of this year, kind of cocktail of China's slowing economy, capital outflows, depreciating currency. The energy price has definitely been a key factor. Weak global economy, and also a lackluster outlook for corporate earnings, particularly around that mining and energy names, those sectors, is all causing this kind of sell-off that we've seen since the beginning of the year. Just moving my chart over to the S&P on a slightly longer perspective. So the sell-off has been in excess of 10%. So 10% does mark correction territory when it comes to equity markets. You can see here it was only back in the beginning of November we're trading above a 2100 handle. You can see this movement here, the bulk of it happening since we came back in for 2016. This is when that Chinese story really kicked off on that volatility. I'm just going to pick up a tweet here that I did last night, if I can drag it into the screen. You can see here this correction picture across these major indices in the US, all the way S&P down, Nasdaq, and the smaller stocks, sometimes seen as a more finer point or looking towards corporate health in the US. That's also down the most, down around 22%. So just taking a look in terms of the Asian session then, what that meant. When things Selling off yesterday, we did see a general flight to quality in terms of FX. That led to broader yen strength. So, as is typically the case, and what normally happens is a stronger yen hurts the Nikkei. Again, that was down around 2.7% overnight. The stronger currency does hurt because of the large amount of export names which comprises the index. Asia generally was down, as too was the Shanghai Composite to start with, but in true fashion, it did stage a bit of a late rally, and the actual Shanghai Composite finished up fairly sizable amount, around 2%. Once again, state intervention being tipped for that, but as per usual, we don't really hear of the exact details. Another interesting graphic, just to quickly show you, when it comes to China and intervention. Unlike many Western developed markets, and they tend to be fairly secretive in terms of the ways and means in which they go about propping up the market. I think this graphic, a couple of the points here you can see from the bullets, really sums it up. You can see on July 4th, for instance, 28 companies, quote, voluntarily suspend IPOs. I'm pretty sure that's not voluntary. You've seen those articles, I'm sure, circulate at the end of last year when there's lots of kind of comic pictures of, or Twitter at least, of policemen battering investors into submission to make sure that they don't short the market. And a number of these points kind of suggesting that regulatory commission banning major shareholders, those with stakes of 5% or more, from selling shares for a period of 6 months. All of these tactics are making it more and more difficult, really, for China to return to some sort of more open market, because it's not until they get to a point where they can get by without doing these kind of interventions where they'll start to be included more on a global perspective. But again, the Shanghai did finish up, but overall the sentiment still being derived more from the negativity of that sharply lower close on Wall Street. General negative tone in Asia. And again, we are in correction territory now in terms of US equities. In terms of oil prices, let's have a quick look at where we stand at the moment. Brent futures overnight, they did trade a sub $30 handle. Again, in terms of Brent, I did see quite an interesting quote out of Barclays this morning. If you just bear with me 1 second, I'll see if I can bring that up. Okay, so Barclays describing the oil market as uncomfortably numb, with global macroeconomic concerns and mounting warm weather deleted the seasonal uptick in oil demand, and OPEC supplies are rising, especially with Iran's sooner return and non-OPEC supply not adjusting fast enough, meaning that there is still further downside risk to prices this quarter. Again, although oil at present is holding on to some marginal gains, around 19 cents in West Texas Intermediate, again, given some of this overwhelming negativity and sentiment, wouldn't be surprised if we have another look at that $30 handle. Of course, we did briefly go beneath there on Tuesday. Yesterday, after the DOE numbers, we got close to threatening that level once again before seeing a bit of a bounce. Again, we're only around 69 cents though from that mark. As I said yesterday, likelihood that 30 is pretty big from a psychological point of view now. So it's going to take quite a bit to really break it. But if it does, could be quite an extended move lower. And then we'll be looking at the likes of 25, 20 on the downside, which a lot of those bank calls have been for 2016. Moving on, one of the other bigger events for today is going to be the Bank of England. They do have their monthly announcements for interest rates. You can just see from this chart on the bottom left, I thought most appropriate to put it on a slightly longer term perspective. You can see here from really mid-December to where we are at present, it's been quite one-way traffic for sterling. Having gone through that 150 handle, at around mid-deck 2015. We're now trading around the 144 mark. And as we've been pointing out the last couple of days, kind of a multiple scenario out or playing out with sterling currency. Weak data that we saw, industrial manufacturing production earlier this week. The lingering fears still on a Brexit that will only grow as the months roll by. We get closer towards that referendum. And then all of this in terms of this correction now in these equity markets, the volatility in China, the fact that people are starting to price in the more slower trajectory of rate hikes from the Federal Reserve. Likewise, then that will likely slow down the Bank of England as well, and hence the pound has been continuing to weaken. Again, later, midday, we get the Bank of England interest rate decision. Not expecting by any means any change in interest rate there. But we do have the minutes. That's their new process now. They release them at the same time. In terms of the actual split, I'll have a bit more thorough run through for you nearer to the time of release. But as far as I understand, it's expected to be 8-1, which has been the case for the last couple of months. Ian McCafferty, the most hawkish member, likely to continue to remain that way and vote for, I think it's the 5th or possibly 6th consecutive meeting for a 25 basis point increase. But overall, the comments are going to be the most important from that minutes. I think the last time they came out, we did see a bit of downside in cable. So we'll be looking at that very closely later on today. Otherwise, in terms of other major news from overnight, I'm sure many of you have seen the headlines about a tragic event, an explosion in Jakarta, leaving several dead. Again, as I was kind of explaining yesterday on these terrorist situations, in the local market, the stock market in Indonesia has been hit fairly hard on this. The rupiah, I think that's how you correctly pronounce their local currency, that's been hit as well. But in terms of the broader market, that's not really coming into play. You know, obviously our thoughts go out to those injured, but in terms of a market perspective, it's going to take something to happen in a major Western city, i.e. London, for it to really shake these markets. Again, one thing is, normally when we have a terrorist attack, wherever it is in the world, it does normally result in heightened security in major cities in Europe. So if you do hear the squawk at some point today talking about potential suspect packages, so forth, there's something to just be aware of. Again, traders in the past have often said to me, why do you point out these suspect packages? It's often nothing, and you're just creating noise. But, you know, I was on the desk when 7/7 happened, and when that first happened, the first headline came down. All that was reported was just a electricity bang in one of the subway stations. No one knew what it was. No one cared. Then one of the stations got closed. Again, no one cared. But it obviously, as we all know, turned into a serious situation and did shake the market considerably on that day. So again, these things are worth just keeping half an ear on. The unfortunate truth is, I'm sure at some point something might happen. But anyway, I don't want to be too downbeat for this morning. Let's move on to some other things. Looking at the calendar then, other events to look out for. Again, this morning, pretty quiet European data, nothing really too much to note. Let me see if I can just pull up the daily calendar for you so you can see it yourself. So things like, let's say, the German GDP, again, that's really not important. Reason why, although it's an important country, it's the yearly reading, so that won't move the market because it's just comprising of data we've already seen and it's historical. Italian industrial production, again, not really of great concern. And then, as mentioned, we have the Bank of England at midday. In terms of the US session, there's not too much here that I'm really looking at other than the weekly jobs data. That does tend to add a bit of intraday noise to prices over a very short-term perspective on the release. But given where we stand at the moment on the Federal Reserve's policy and the path to Interest rates and a market pricing not looking for the next hike until possibly June of this year. Jobs data has taken a slight back seat, if you like, in terms of importance for the market. We've got Fed's Bullard. Now, he is one which I would definitely say you need to keep an eye on. He does like the sound of his own voice, to say the least, and he does like to be pretty punchy with what he says. He is a voter as well this year, and a leaning hawk. So he is speaking to Economic Club of Memphis. So when they speak to economic clubs, Federal Reserve members, it is, or tends to be, an opportunity for them to say something on monetary policy. Other than that, we do have Lockhart, but is a non-voter. We'll be speaking as well this afternoon. ECB's Draghi and Coer, they're also speaking at a Eurogroup meeting in Brussels. So although this is the ECB governor, normally, or typically when they are meeting in Brussels, it's just to give politicians there in Europe a bit of an update on what we already know. It's just generally sentiment of how things are going in Europe. But nonetheless, when someone like Draghi is speaking, of course, we'll be covering that in full. That'll be at 2 p.m. this afternoon. So that pretty much wraps up the morning briefing. Again, overall, a bit of a negative start to the day as I look up at the charts, just seeing the DAX future, just touching on fresh lows. Again, later on, when we get into the US session, I'll be keeping an eye on those oil prices once again. We do also have, I believe, some larger cap earnings as well coming up today. We've got JP Morgan. That'll be the first of the major investment banks to report. They typically set the tone for the banks who will then come thereafter, i.e. next week, likes of Goldman, Citi, Bank of America, and so forth. We also have Intel. They report after market. They're one of the blue chip names for the tech sector as well, and that could dictate proceedings for equity markets overnight in Asia and then into Friday's session. So that's it. Have yourself a great day. Good luck out there. And I'll be on the mic throughout the day to give you a helping hand. But good luck. Thank you.